Welcome to the B.F. Anderson Technical Report for November the 3rd. If you try to do too much, you will not achieve anything. Confucius. One thing about technical analysis, it can become very technical and can be very difficult. And what I want to point out about technical analysis is that what the form of technical analysis we use is called trend following. This is simple math. This is not calculus. This is not some kind of difficult technical mathematical formulas. This is just very simple math. So let's just kind of take a look at where we are right now with interest rates. Now, one thing I did want to point out, Financial Times magazine came out with an article saying that the average retail investor's portfolio is down 44% year to date. And one of the reasons is that the bond market is having its worst year yet. This is the only time that stocks and bonds have gone down 10% or more since 1976. So this has been kind of a record-setting situation. Now, if we look at interest rates, which is the junk bond fund that we're keeping an eye on, you can see it's trying to put in a bottom here. However, with the Fed news yesterday, I have a feeling the bond market probably will sell off today. But the Fed made it clear. Also, you can see here with the S&P 500, they tend to pretty much track together. Now, to kind of put it into perspective, this is a graph of the 30-year mortgage going back to 1990. Now, you can see since 1990, mortgage rates have just been consistently dropping in a definite downtrend. But then all of a sudden, boom, we get a major move. So at the beginning of this year, the 30-year mortgage was at 3%, and it's now over 7%. So that is more than a doubling of mortgage rates in less than a year. And that has just never happened before. So we're really dealing with some interesting times here. Now, here we are with the NASDAQ. You can see yesterday's sell-off. We broke down below the lower moving average. The lower moving average has turned down. So the NASDAQ is where the problem is. Mainly the technology stocks are just having a difficult time. However, the mid-cap stocks, as we look at the indicator, it continues to be above the lower moving average and on a buy signal. New York Composite continues to be on a buy signal. The small cap stocks continue to be on a buy signal. However, this gap down is really not a good sign, but we're still on a buy signal. Here's the S&P continues to be on a buy signal, but you can see the gap down after the Fed announced a 0.75 increase in the Fed funds rate. Now, the volatility index actually is improving here. I'm doing this on a graph where we're looking at basically an intermediate term trend. The VIX is now below. So in other words, you want this indicator to go down because it means volatility is going down, broke below the 200-day moving average. So actually volatility is somewhat improving. Now here's the real fly in the ointment. This is the NASDAQ compared to the consumer staple stocks. You can see here making a fresh low. This is not good. This is basically saying that the technology stocks continue to underperform, and that's just, growth stocks in general, really. Now, our three economic indicators, you can see here interest rates have somewhat stabilized around 4% on the 10-year Treasury. So that's kind of in line with the Fed funds rate, and, the 10-year is the one to keep an eye on. Oil stocks, or the oil price, is pretty much stabilized, moving sideways. Financial stocks have improved, however, rolled over somewhat yesterday. New lows continue to be too high. We're at 89 new lows as of the other day. However, is improving relative to where we have been. Now, on the trend strength for the S&P 500, you can see here we're still at 12.5%, but coming down. And on the NASDAQ, we're back to 0%. So again, the problem here is the technology stocks and the NASDAQ. Volatility index, just take another look at it. We can see here that the VIX is now down below 30, trading around 25.84. So the VIX is improving, and as you can see here by my rate of change, for the last 10 days, the VIX has dropped by 16%, as you can see here. So there's been a big improvement in less volatility. Hopefully that doesn't pick back up. Yield curve continues to stay inverted, which indicates recession. Now, as we get into the top 5, you can see here Shockwave Medical. The medical stocks, the healthcare stocks, are holding up pretty much the best. There was some insider selling on Shockwave, which caused it to pretty much sell off right in here. Somewhat recovered, kind of hanging there, moving sideways. Continue to watch it. This is Prothena, which is biotechnology. We're seeing a lot of biotechnology stocks come onto our list. Gap up based on earnings, pretty much held the gap and is in somewhat of an uptrend. Continue to watch Prothena. Here is Neurocrine Biosciences. Now, we have taken a position in this stock. You can see here major volume, buy volume coming in, and a gap up, and then followed by another gap up. So, like I say, biotechnology continues to look interesting. This company is involved in neurological drugs. This is another pharmaceutical, Iveric Bio. It's been on our list for a while now. You can see here the gap up, held the gap in a strong uptrend. Then on Enphase Energy, which is solar, we've been in the stock before in the past. Gapped up, held the gap, moving sideways. Got into a little bit of trouble here, but actually breaking out, looking like another gap up right in here. So the main point I want to make is that with the indexes, which we look at 5 indexes, of which 4 are on buy signals, only 1, meaning the NASDAQ, is on a sell signal. What we're trying to just determine is, are the sellers in control of this market or are the buyers in control of this market? So with the market in a downtrend and things somewhat downtrending, the sellers are pretty much in control here. But at some point, they're going to run out. Now, the problem we're having now is there's just not any buyers. So if you have any questions, let me know.